Dear viewers, when there is nothing, there is hope, and when there is hope, miracle happens. I am your host Muhammad Asif Jaja, and you are watching my YouTube channel ETV 786. We are learning the basic concepts of accounting through this channel, and this is lesson number 23, Dissolutions. And this is the last lesson of basic concepts of accounting. Dissolution of company. A company is said to be dissolved or struck off when it is ceased to be exist as a corporate entity, and after dissolution, the company cannot be sued in the court of law. On dissolution, the name of the company is struck off from the register of companies by the registrar and is published in Office Gazette. After dissolution, the company is ceased to carry on its business. Management affairs shall be withdrawn from the director's hands, and an administrator called liquidator is appointed who takes the control of the entire company in his hand. In this process, a company comes to an end and all the assets and the properties of the company get redistributed. Causes of dissolution of the company. The dissolution of a company takes place voluntarily by the will of the shareholders in the general meeting or shareholders meeting. In the voluntary dissolution of a company, the assets of the company get realized and the liabilities get paid off. After this, if there is any surplus left, then it gets distributed to the members of the company in accordance with their rights. Number 2, when a company is commercially insolvent and available assets are insufficient to meet the existing liabilities, then the option left is to dissolve the company. Causes of dissolution of a company. The dissolution of a company also takes place by the order of a court, such as the business license can be revoked by law after the performance of illegal activities. Number 4, transfer your company's undertaking to another company under the scheme of reconstruction, merging with other companies, and amalgamation. In this condition, the transfer of a company will be dissolved by an order of the tribunal without being wound up. Number 5. Another important cause of the dissolution of a company is the expiration of the article of association of a company. Number 6. Another cause of the dissolution of a company is that since incorporation, no activities have been commenced. The procedure of dissolution of a company. Step 1. The first step is to obtain written permission from all the owners of the company for dissolution of a company. The dissolution must be approved by the majority of the shareholders. If the vote does not pass, your business does not secure the shareholders' vote and cannot be dissolved. Step number 2. Afterward, the certificate of dissolution or article of dissolution is filed with the registrar of the company or secretary of the state. Next step is to satisfy all the outstanding taxes, whether it is from the federal government or from the local government. Number 4. After the dissolution is approved, the company must wind up its affairs. It cannot conduct any business other than that necessity to wind up its affairs, such as notify customers, suppliers, landlords, insurers, employees, and vendors, and cancel licenses, permits, and registrations. The procedure of dissolution of a company. Step number 5. Another important step is to make the federal and state employment agencies know about the door dissolution of the company. Step number 6. Creditor claims must be settled by the company is the next step. Accepted claims must be paid or satisfactory arrangements made with creditors for repayment. While rejected claims, you must advise creditors in writing that your company rejects their claims. Step number 7. After paying claims, the remaining assets may be distributed to the company owners. Assets are generally allocated according to the shareholders or members' percentage of ownership. Step number 8. Issuing of the official certificate of dissolution from the Secretary of the State or Registrar of the companies, which is the evidence of the dissolution of the company. Who can stop to dissolve a company? A common objector is creditors who are owed money. If an objection is upheld by the registrar, then the proposed dissolution will be suspended. Creditor can apply for a court order to restore the company to register even after dissolution if the company has evaded paying them. This is why it is crucial to inform all interested parties of your intention to dissolve the company and ensure that all creditors are fully paid. Dissolution is only applicable if your company is free from debt. If your company is insolvent, dissolving it is not an option. Instead, you will have to consider another type of insolvency proceeding such as creditors' voluntary liquidation or CVL. Liquidation differs from dissolution and involves extracting the assets from a company and using these to pay off any outstanding debts. Members' voluntary liquidation or MVL. While dissolving your company may be the best course of action in relatively straightforward cases, a member's voluntary liquidation MVL may be the preferred option if your situation is more complex. Just like dissolving a company, MVL is only an option where the company is capable of paying its debts, including outstanding taxes, within a calendar year. A declaration of solvency must be signed testifying to this extent. The MVL must be agreed to by a minimum of 75% of the company's directors. MVL differs from dissolution as a liquidator is appointed to contact all creditors and ask for proof of debt. When this has been satisfied, any remaining money will be distributed amongst the shareholders. While MVL comes with more costs than a straightforward dissolution due to the involvement of a liquidator, it made better financial sense from a tax perspective to go down this route if there is a sizable value of shareholder funds involved. Register the company as dormant. If you envisage that you may want to reinstate your company in the future, registering it as dormant may be a better option. This not only keeps the company on the back burner, it also keeps the business name registered to you, meaning no one else can use it. While dissolving your company may seem like a relatively straightforward process, it must be approached with caution. If you provide false information in your application, or if you fail to notify an interested party, the consequences can be severe. You can face disqualification as a director, be handed a considerable fine, or in extreme cases, you could even face imprisonment. If you are in doubt as to whether you qualify for dissolution, how to go about completing the form, or even whether it is the best option for you, then you must engage a professional who can guide you through the whole process and discuss the best option for you and your business. Dissolution of a partnership firm. Dissolution of a partnership firm is a process in which a relationship between partners, a firm, is dissolved or terminated. In case of dissolution, the firm ceases to exist. This process includes the discarding and disposing of all the assets of firm and settlements of accounts, assets and liabilities. After dissolution, the partnership firm cannot enter into any transaction with anybody. It can only sell the assets to realize the amount, pay the liabilities of the firm and discharge the claims of the partners. However, the dissolution of a firm may be without or with the intervention of the court. It is noteworthy here that the dissolution of a partnership may not necessarily result in the dissolution of the firm, but dissolution of a partnership firm always results in the dissolution of the partnership. Reasons for dissolution of partnership firm. Number 1. Dissolution by agreement. A firm may be dissolved if all the partners agree to the dissolution. Also, if there exists a contract between the partners regarding the dissolution may be take place in accordance with it. Number 2. Compulsory dissolution. A. Insolvency of all the partners or one partner, as this make them incompetent to enter into a contract. B. When the business of the firm becomes illegal due to some reasons. C. When due to some event it becomes unlawful for the partnership firm to carry its business. For example, a partnership firm has a partner who is of another country and country of origin declares war against that country. Then he becomes an enemy. Thus the business becomes unlawful. Reasons for dissolution of a partnership firm. Number 3. When certain contingencies happen such as number A. The firm is formed for a fixed term or a specific venture. On the expiry of that term or venture, firm will be dissolved. B. When a partner dies. C. When there is a change in the existing profit sharing ratio. D. On admission of a new partner. E. And on the retirement of an existing partner. Number 4. Dissolution by notice. When the partnership is at will, the dissolution of a firm may take place if any one of the partners give a notice in writing to the other partners stating his intention to dissolve the firm. Reasons for dissolution of partnership firm. Number 5. Dissolution by court. When a partner files a suit in the court may order the dissolution of the firm on the basis of the following grounds. In the case where a partner becomes insane, in the case where a partner becomes permanently incapable of performing his duties, or when a partner becomes guilty of misconduct and it affects the firm's business adversely, then when a partner continuously commits a breach of the partnership agreement, and then in a case where a partner transfers the whole of his interest in the partnership firm to a third party, in a case where the business cannot be carried on except at a loss, and then when the court regards the dissolution of the firm to be just and equitable on any ground. Settlement of accounts. In a case where the partners do not have an agreement regarding the dissolution of the firm, the following provisions will apply. The firm will pay the losses including the deficiency of capital, firstly out of the profits, secondly out of the partners' capital, and lastly by the partners individually in their profit sharing ratio. The firm shall apply its assets including any contribution to make up the deficiency, firstly for paying the third party debts, secondly for paying any loan or advances by any partner, and lastly for paying back their capitals. Any surplus left after all the above payment is shared by partners in profit sharing ratio. This is the end of lesson number 23 of the basic concepts of accounting, which was dissolution. Now with the end of this lesson, the first study course, Basic Concepts of Accounting, is complete, and the channel has grouped the course into 3 playlists. You can choose as per your choice. The 3 playlists are Accounting for International Students, Accounting for Local Students, and all in one complete course. You are watching YouTube channel ETV786. Please view, like and share the videos and subscribe the channel. Bye bye till the next show.